Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, May 14, 2018. Hope you had a great weekend, but it's time to get back to work, so let's do that. People, as I am doing this video blog, yet again, the yield curve is flattening. The spread now between the 10 and the 30 year is under 13 basis points, or 0.129%. If you've been following my work over the past few weeks, you have witnessed, because I've covered this, a rapid flattening of that yield curve. Just a couple of weeks ago, we were at 16, the spread between the 10 and the 30. We are now under 13. Here's the situation. It seems that the entity out here, we know who it is, that is determined to keep that 10-year yield suppressed under 3%, well, they can't have it both ways. Every single time they get in here and start buying up those bonds, and they're going to do that today or tomorrow, I'm sure of it. If you were to look at the chart on my website, hopefully you're watching this video on my website, glance over to the right. The chart of the bond market, you will see bonds are selling off. The 10-year yield is creeping higher. They will not allow this to happen. It's rigged. You know that. So what they are going to do here is get in here, start buying bonds again at one point, and that will again flatten out that yield curve. Now again, the yield curve is a leading indicator. It has predicted, beyond being accurate, the last 7 recessions and the last 2 stock market crashes. So keep your eye on this. You and I, we're on inversion watch. There's no doubt about it. The curve here is flattening at an alarming pace. Meanwhile, it is being absolutely ignored by the Confederacy of Dunces, which makes them even more of a dunce or dunces, because they won't talk about this. They will not allow people to understand what's going on or see what's going on here. Now, understand this too. I will cover this again because I keep getting questions about it. Yes, you and I are on inversion watch. That does not mean, people, it does not mean that once we get a yield curve inversion, and it's coming rapidly, that the market is going to melt down at that point. It certainly may do that, but there's no guarantee that it's going to happen at that time. Again, I will cover this. There is a lag time. The last 2 times we had an inversion, 2008 and the time before that, the dot-com bubble, there was a lag time, several months. Markets followed lower. So what you can expect here, beyond any doubt in my mind at least, is the propping up of the stock market by stock buybacks. Companies are buying back huge amounts of their own stock, which is a form of rigging if you think about it. It's not that they want to return money to shareholders, because if they really wanted to do that, all they would do is increase the dividend, not buy back shares of their own stock. You understand? So it's rigged. This is all being played by Washington as well. This market, they're going to make every attempt imaginable and things that we can't even imagine to keep this market propped up through the midterm elections, which means extreme rigging in the bond market, extreme rigging in the stock market, suppressing those interest rates, further pushing the yield curve flatter. I think what they're going to try to do after the midterms is in somehow try to normalize this. I don't think they can do it. They've created distortions that are literally beyond belief. So that's my take. They're like, okay, well, let's continue to do this. This is them speaking. Until through the midterms, so we could, fake the market, make everyone think everything is just great, distract them by the rising stocks, and then we'll try to fix this. Well, I don't think it's going to work. And in the event that the Democrats win over the midterms, I mean, then who knows? All bets are really going to be off at that point, and who knows what will happen. Anyway, look, that's neither here nor there. The issue here is watch that 10-year yield. Again, I hope you're watching this on my website. See what they're doing with that bond market. They will not allow that to go meaningfully higher than 3%. It's kind of a line in the sand. They will suppress interest rates. They will buy those bonds. They will flatten out that yield curve faster. Like I said earlier, it's shocking how fast it is flattening out. Just a couple of weeks ago, it was 16. A couple of weeks before that, it was 18, 20, 21. It's unbelievable. It's literally unbelievable. Now we are under 13 basis points, or 0.129%. Who knows where we'll end the day? Could end up lower than that. Anyway, interesting, isn't it? All right, I'll see you at the end of the day. Bye.